Today we're going to look at a couple of new setups. One is the currency pair Euro-Japanese yen, and the other is a strangely named cryptocurrency known as the graph. Stay around for a bit more of an explanation. Hi, this is Tim from TradingStrategyGuides.com. Stay around to the end of the video and I'll share a bit more about my Comcash Alerts app where you can chat with me and see more of my trade setups. Today I'm going to show you a trading range on the graph, a strangely named cryptocurrency based on the Ethereum blockchain. And more simply, we'll look at an ascending triangle on the Euro-Japanese yen currency pair. But first, let's look at the active trades, and later on, this week's trading maxim. Happy Monday, everyone. I hope you're looking forward to an extraordinary week. Let's catch up on the active trades. Well, Bitcoin finally popped up right here, hit our first target. I got half off for profit and set the stop to break even on the remainder. And then I started trailing my stop as soon as the PSAR got up to here. I kind of held it at that level because it had started to consolidate a bit here, and I shared that stuff with the Comcashers. Anyway, Sunday this thing dropped and hit our stop, closed at 58,953.04 for a profit of 1230.04 per coin, and that represented a 0.4% gain on our account. Well, Monster is ballistic once again right there. After consolidating just a little bit right in here, I had held this trailing stop down here somewhere, I believe, until that consolidation cleared, and now I'm back to trailing stops. Currently the trailing stop is at 94.55, locking in $2.79 per contract. And Google hit our target back here. Got half off for profit, moved the stop to break even. It's currently sitting right there, and we're waiting for the parabolic SAR to get above this break even point to start trailing our stops here. New Zealand dollar, Swiss franc triggered a buy on Thursday and then closed back inside the flag right down here on Friday. I closed this for minus 40 pips or a 1% account loss on this. Stuff happens. Done with Kiwi Swissy for right now. Spot gold gave us a buy trigger right here on Thursday. Almost pushed up to our target on Friday, but I expect that it will do that in the next day or so. And the Swiss franc Japanese yen has blown the descending triangle right here with all this stuff above the triangle. So no trade here. Pattern is blown. And since the volume and volatility continue to decline right here and right here, I'll probably try to find another pattern to trade on this one. For now, I'm done with the Swissy yen. And the same on the Australian dollar, Swiss franc. All of this activity below the ascending triangle. So this pattern is also blown. Done with the Aussie Swissy for now. No trade on this one. And that's all for the active trades today. Let's take a look at today's trade picks. Here's a description of the graph from Coinbase.com. The graph, GRT, is an Ethereum token that powers the graph, a decentralized protocol for indexing and querying data from blockchains. Just as Google indexes the web, the graph indexes blockchain data from networks like Ethereum and Filecoin. This data is grouped into open APIs called subgraphs that anyone can query. Now, I understand that may be more complex than any of you want to hear. I understand it only because I've been a software engineer for most of my life. To sum it all up for you, this is another cryptocurrency that we can trade and potentially make money on. It trades on all the major crypto sites like Coinbase, Binance, Bitfinex, etc. Some, like Coinbase, may require you to purchase Bitcoin and then exchange it for the graph. I found a great page about the graph, and I'll link it below if you want more information about it. The symbol is GRT, and we'll be trading it in a pair with the US dollar, hence GRT USD. We've got a trading range, and just to be sure everyone's with us on this, a trading range is a consolidation with a strong support level like this one at 126.48 and a strong resistance level like this one at 224.80. Price just sort of bangs back and forth between these levels until it eventually explodes out of the range in one direction or the other. I will take a break of a trading range in either direction. And as a nice confirmation of the consolidation, we have a decline in volume and volatility right down here. Volatility is the amount of daily movement of the price, and I measure it with the average true range, or ATR. Here's the trade plan. We will buy a daily candle close above the range or above 224.80, or we'll sell a daily candle close below the range or below 126.48. On the breaking candle, we want to see this volume bar reach up to this volume average. If it doesn't quite reach the average but does reach 75% of the average, I'm willing to open a half size position to reduce risk. You can calculate the percentage by dividing the volume here by the volume average here, and you should get 0.75. If you don't get at least 0.75, I suggest you stand aside on this trade. The stop loss is 1.5 times the ATR, and the first target is 1 ATR. So let's say this breaks to the downside, but just ahead of the close, set up your sell order. Look down here at the ATR, multiply that by 1.5, measure that distance above your entry for your stop loss, measure 1 ATR below your entry for your first target. Of course, it's just the opposite direction if it breaks to the upside. If after entering the trade we get a candle close back inside the range, we will take the loss right then and not wait for it to hit the stop loss. A breakout of the pattern should be explosive and hit our target fairly quickly. If not, and the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as our price moves in our direction until the market takes us out. I will only risk about 2% of my account on each trade. And that's today's setup on GRT USD. For the next setup today, we're looking at an ascending triangle on the Euro-Japanese Yen currency pair, also known as the Euro-Yen. An ascending triangle consists of a strong resistance level like this one here at 130.70 with several historical touches or approaches of the line, and a series of higher lows as fewer and fewer traders are thinking about taking this short. Each time the price gets back up to the resistance level, it chips away at sell orders until it finally breaks through. It should break out of the pattern with strong momentum. The ascending triangle is a bullish pattern, and I will only take a buy signal on it. And a good consolidation pattern like this should be accompanied by a decline in volume and volatility like you see here. I measure the volatility using the ATR as I mentioned earlier. And here's our trade plan. We're going to buy a daily candle close above the triangle or above 130.70. Now I'm not going to bore you with the whole trade management details again. That's always the same. If there is at least average volume, enter a full-size position. If there's only 75% of the average volume, I enter a half-size position, otherwise stand aside. Stop loss is 1.5 times the ATR, and the first target is 1 ATR. If you get a candle close back in the range after you enter the position, close the position and take the loss. Get half off for profit when it hits the first target and move the stop to break even on the remainder. 2% risk on this trade. And that's today's setup on the Euro-Yen. Okay guys, this is how I manage these trades. You do you, okay? Make sure you don't take any trades until you understand what you're doing and that you are comfortable with the setup. And the other side of trading is the psychological side. And to keep a handle on that, I use my trading maxims. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. You guys know the deal. Use whatever tools you need to maintain discipline, because discipline and consistency in everything are paramount. And today, Tim's trading maxim number 85. We don't rise to the level of our expectations, we fall to the level of our training. And that's a quote from Archilochus. Archilochus, living roughly 680 to 645 BC, was a Greek lyric poet of the Archaic period from the island of Paros. He is celebrated for his versatile and innovative use of poetic meters and is the earliest known Greek author to compose almost entirely on the theme of his own emotions and experiences. This quote sort of expands on what I preach all the time. Practice, practice, practice. Another one of my maxims, don't practice until you get it right, practice until you can't get it wrong. You should always train and grow, otherwise we stagnate. If you expect to be exceptional, you must train to be exceptional. Remember our GRT trade plan for today. We're going to buy a daily candle close above the range or above 224.80, or we'll sell a daily candle close below the range or below 126.48. And our Euro Japanese yen trade plan for today, we're going to buy a daily candle close above the triangle or above 130.70. For both trades, take a full size position if you've got average volume or better, half size position if you've got 75% average volume or better. Your stop loss is 1.5 times the ATR, and your first target is 1 ATR. Earlier, I mentioned the Calm Cash Alerts app. If you like making cash and you like to be calm about it, then this app is for you. I share all my calm personal trades on the app, so you can trade them right beside me. That includes the trade picks from my Monday videos, like this one right here, and all the other setups I do all week long. You get to see my modifications and additions that happen during the week as well. You know, trading is kind of a fluid activity. Plans change. Someone once said that a battle plan rarely lasts beyond the first contact with the enemy. That's the way it is with trading as well. Sometimes the trading plans I share in my videos require modification on the fly, and it's nice that I can share that sort of thing with the Comcashers, as well as additional trade setups that I find during the week. This is a screenshot from the desktop version of the app showing one of today's setups that I shared on Sunday with the Comcashers. You can click on the link to get a full-size image of the setup. The app is available for iPhone, Android, and desktop browser. If you think you might be interested in being a Comcasher, you can click the link in the description for more details. And that's it for today's video. Come back Wednesday for the next installment of the Trading Education series, and be here Friday for my strategy of the week, and next Monday for my trade picks. My videos come out at 3 p.m. New York time, barring unforeseen circumstances. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, click the like below, subscribe, and hit the bell if you want to be notified of our videos in the future. Have a great week, and I'll see you Wednesday.